What is going on, guys? Good afternoon. It's your favorite mortgage lender, Abdel Kwame, Got Mortgages. I hope everybody is having a blessed weekend. It is such an honor to be able to jump on once again, chat in regards to the market. We've got so much to cover. A lot of different information that's out there right now when we talk about the market. So, super excited to share a lot of this information with us because a lot of misconstrued stuff, and as always, we're here to break things down in the simplest of terms and make sure everything is as clear cut as possible. So I'm going to go ahead and share my screen, and we are going to try to run through all this and take it from there. So again, expectations for this week. Last week was the employment data week. Time is truly flying by. This week we have, in regards to the employment data. Last week we had inflation data. So we're going to go into specifically what happened last week, and then we'll go into what I anticipate to be a really bumpy ride over the next couple of days with employment data, and we'll take it from there. Okay, so CPI, Consumer Price Index, came out a little while before, but we got PCE report, Personal Consumption Expenditure Report, the Fed's favorite measure on inflation, and it came in line with expectations. Although I believe the core came in slightly higher, which is typical given the shelter costs, but the headline inflation came right at the money of what we were expecting. Okay, so consumer inflation is trending in the right direction, which is great. August new home sales beat estimates. Pending home sales went up a little bit higher. Another record high for home prices, U.S. economy, and then continuing jobless claims once again showing a slowdown. Again, when we take a look at PCE report, personal consumption expenditure report, we're seeing headline year over year, a little bit of a decline to 2.2%, with the core really kind of shifting a little bit, 2.7. Again, monthly core reading continuing to be very low over the last 4 months. August PCE report again shown that it raised just 0.1% for July. Year over year readings fell from 2.5 to 2.2%. Again, the trend that we're seeing with core PCE report, guys, is again clearly showing that we've been seeing a lot more favoritism, and we're starting to see that the Fed is starting to notice this stuff. Okay. August new home sales, once again, that actually beat estimates, which is great. This is again based on signed contracts for August, so we didn't yet see a little bit of decline on rates just yet. Here we're starting to see a little bit of transition in regards to where it would normally be at. And then new home sales again showing an uptick, which is great, kind of showing you that inventory and builders' confidence is starting to tick up as well. We saw pending home sales again also tick higher. Signed contracts on existing homes again improved slightly in August. Generally, usually is around the busier times when we talk about August again. And then we saw a little bit of obviously mortgage interest rates tended down in August, causing a little bit of demand, right? The bottom line again, signed contracts on existing homes once again are starting to pick up. We're once again not seeing that full impact on lower interest rates, but it is slowly starting to transition that way. And once again, we got updates on Case-Shiller. Case-Shiller is one of the leading resources that we track when we look at this stuff. And it showed, again, appreciation jumping up 0.2% from 2 months ago, from June to July. And again, that seasonal adjustment jumping up a 5.5% year over year gain. Again, Case-Shiller, if we see this, once again, home prices continuing to tick up, jumping up 5% year over year from where it was really moderately the prior year, right? U.S. economy, again, we saw updates on GDP, gross domestic product, also showed that the economy is growing up by 3%. Economic data and economic activity, again, better than expected in the second part of the quarter. Now, continuing jobless claims, although it dropped, we're seeing that the continuing claims is where it's at, right? Initial jobless claims really tends to usually drop around this time. Continuing jobless claims, again, people who are being let go are having a hard time going back into the labor market and finding a job. So therefore, they are extending their unemployment. Now, again, like I said, this week we've got the labor data report, which is pretty crazy. I mean, these we're already at the end of Q3, which is wild. But we're also starting to see, going to get tomorrow, JOLTS report, job opening and labor turnovers. We'll get the private payroll on Wednesday, unemployment claims on Thursday, and then the BLS report. I don't know how much weight they play into it now with all the revisions and stuff that they did, but it's there, right? 30-year fixed mortgage rates, if we kind of see a little bit, we went down pretty sharply. Really, I would say at the start of around the end of July, beginning of August, we kind of went on a decline. Then we're slowly kind of ticking up a little bit. And remember, just because the Fed cuts, that doesn't necessarily mean that we're going to see immediate interest rate drops. And that's a misconception some people are having. Although we were able to sneak in a couple clients in the mid to low fives, some clients on the FHAs and the fours paying a couple of points. but they were able to squeak in. We're starting to see a little bit of an uptick, right? This red usually means that interest rates are starting to go up. So a little bit of transition, right? Not much of a big jump, kind of really where we were at, I would say, about start of the month, give or take. And we're starting to kind of slowly get there. We'll see, hopefully, if we could reverse this trend. As always, you guys remember, if you guys want, if you go to our website, gotmortgages.com/blogs, every single Monday market update that we have done is essentially on here. So you guys will have the ability, go back, check that out. We usually always drop. This was the one from last week. We will always drop this recording once again in here, so you guys have the ability to go back and also review it in case you missed it. So really not much going on aside from that, but we really want to start to stay on top of, again, the employment data market, where the transition is going to be on that. And then we want to truly stay on top of, really, is inflation going to continue to remain tamed? And is the employment market going to continue showing those signs of cracks within the labor market? Okay. So I appreciate you guys jumping on. Of course, we will share this later once again on our website, on Got Mortgages, on our podcast channel, on Spotify, and then we will also share it through all of our social media channels. I'll catch you guys next time. Have a great day.